Okay, let's talk investment strategy now with our resident expert, Anthony Landel from Equilibria Finance. Anthony, always good to see you.
Nice to be here.
Let's start with your reaction to the property news, because this is a very indicative of where Australia is headed. What do you think of the numbers that we've been seeing in home sales, in auctions for this week?
Yeah, they probably weren't expected 6 months ago, but they're probably not that big a shock given what we've actually been seeing. And I think the last bit you talked about was that it's underpinned by population growth through the migration, strong employment figures, and essentially a shortage of supply, which is creating some concentration competition, which is making the market very resilient. So it's probably counterintuitive to maybe what people thought might happen, but Australian housing market is remaining strong. In fact, as those numbers indicated, it's back growing again.
Yeah, I found it interesting that they find it hard to predict next year because there's just so many moving parts. Now, this week, though, we did see a number of REITs and property groups reporting in the reporting season. What do you make of some of the figures that you've seen from an investment point of view?
Yeah, look, from an investment point of view, probably the main challenge we're seeing with some of those REITs is around the valuations of the properties, particularly around the office spaces, particularly around some of the retail spaces. So there's some rewriting of valuations going on. From an investment strategy, I guess it's about time and staying in the market, because obviously markets do have their ups and downs. There is a bit of a structural adjustment going on in commercial property though, particularly around office space. With ever since COVID, I guess the working from home, there's a lot of office space now that's being split into different areas. There's a lot of office space that's being reutilised. So I guess it'll be interesting to see over the next couple of years with these valuation write-downs what happens, particularly around that office space. Flip side is we're seeing strong numbers in logistics and warehousing where there's been a lot more demand and there's almost been a bit of a shortage of supply in those areas. So they're performing strongly.
Yeah, you say from a portfolio point of view, you said staying in the market, but for those who aren't yet in the market, if you look at all those valuation write-downs, where are the opportunities there? Because normally, yes, you can see it as bad news, but also companies at a discount.
Yeah, they are, and traditionally those REITs are providing fairly good, strong long-term returns. And I guess the flip side is if you're not in the market, is it a good time to invest in the market? And like with any investment, you're looking at where the value is. I think what people are waiting to see a little bit with, say, the office space is how big a structural shift are we going on here? Is it going to be a bit of a longer term downturn, or is there actually going to be a recovery? My view would be that there will be a recovery of sorts in terms of whether some of that space is either repurposed. A lot of firms are now wanting people to come back into the office space, but like any asset class, I suppose, whether they're undervalued or not, there will be opportunities there where maybe there is some value to pick up now on the growth that might be expected over the next couple of years.
All right, so if you see this as something that investors might look to diversify their portfolios, how do you access this?
Yeah, so there's a lot of different ways for an investor to access property these days, and ETFs, REITs are just another opportunity for investors. The benefit of those is that they're more liquid. You may not need as much money up front to get involved in them. And you've also got the opportunity to invest in a property trust and diversify your portfolio. Typically, you might do that. You can either go direct, you can go through a fund manager. Essentially, it's like trying to invest in the stock market in terms of how to access them. A lot of the property trusts add a lot of diversification to a portfolio. And what we're seeing is a shift in people maybe from going direct, where the cost to fund is quite high with the interest rates, to looking at a property trust where they're getting some good, strong diversification across different portfolios, which is de-risking some of what we're seeing in the office space.
Are you able to pick out some of the REITs that you like at the moment?
The ones that are tending to perform well are the ones that are in more of the space around the industrial, the warehousing space and stuff like that.
Warehousing. Okay, well, let's talk about using leverage. You talk about direct approach of using leverage. What is it and what are the considerations?
Yeah, well, essentially leverage is using debt to get into property. So from an investor's perspective, a lot of mum and dads might start by leveraging their existing owner-occupier home, get equity, purchase a new property. So the beauty of property is you can leverage. That's one thing that the stock market may not offer, is you can use debt to buy another property that might be at a higher value. So over time you can grow your portfolio. The challenge at the moment is the cost of actually leveraging is getting higher with the interest rates and the cost of holding those properties. So one of the big concerns for those at the moment trying to grow their portfolio is managing cash flow and actually being able to leverage and meet the serviceability requirements of the providers.
Okay, so in this current environment, is it something that you suggest that they get into quickly? Because you're talking about high rates and getting into debt. I find that hard in this environment. What is the benefit, and is now the right time?
It's a really good question. Fundamentally, if you're trying to pick any asset class and find a discount, you're probably picking the wrong asset, in this case property. But if you're looking at an asset that the core fundamentals make sense in terms of property, the infrastructure, the rental yield, the growth over time, and you've got a tax effective strategy around that, then as we were discussing with the REITs, there's going to be areas that are providing value. So at the moment you're looking at areas where they might be a little bit, the valuations have come down and you might be trying to pick up the growth. There's some regional areas, for example, that probably were overvalued 3 or 4 years ago that are now coming back to the market. So I think if an investor's got the cash flow, they're able to service the facility. It's a bit of a cliche, there is always opportunities out there. And in a sense, it's not a bad time because there are areas that are starting to grow. If you can find those areas where there's still some value in that growth, then yeah, I think there's some good opportunities out there, albeit investor credit flows are down about 30%.